I mean, just look at this. This is beautiful. Like how perfect it tapped on that level that is mentioned. So NQ is likely to push lower as it gave us this lower divergence. So at 9:30 opening, all three have taken out Thursday's low, which is previous day's low, but only NQ has taken out the previous 2 days low. So I'm going to show you some magic, and the moment when I studied this, I'm like, wow, amazing. But most of the time you'll see stuff like this where price just reverse back into your entry and you're like, yes, I got the bag before it reversed back into my break even. Everyone, so welcome back to another episode, and today I will be talking about the worst day to trade in the markets. So basically it is the last Friday of the year of 2024. So usually I don't even trade on Fridays majority of the time, but this time I thought I would just do an analysis based on the low, news timing. And usually when there's not so much manipulation going on, price can actually do what it usually does based on the algorithm. So today I will just be showing you guys a trade setup that would have gotten you 4.44 risk to reward if you were trading on the least likely day of the year, which is the last Friday of 2024. So if we're talking about like 30th and 31st December of 2024, those are like Monday and Tuesday. Monday sucks too, so maybe we might find something on Monday as well if you all really want to see me do it, but this will be the Friday one. Okay, so let's start off with what I have written on the YouTube video just before this, which is this little chart. I'm expecting for price to drop a bit lower upon the end of this center rally. There are three similar scenarios for each of the assets that I'm looking at, which is my ES, NQ, and Dow Jones. Since Dow Jones is already moving lower, I'm just waiting for divergence between ES and NQ for the drop lower to happen. So this is the weekly target for price to drop into previous week's low. So on the weekly time frame, the weekly goal would be this previous week's low. And since we're already on, Friday, this would be the target for next week coming into 2025. So if price doesn't want to move that much, during 1 week, especially the first week of the year, then we can extend this target out into the first 2 weeks of January. So on the daily, there's no divergence here yet. Price may still reach higher to gain more strength. So look out for discount PD array. So on larger time frame of daily, price have not given the larger time frame divergence, but we do see a slight divergence, which is the ES reaching into 50% of new day opening gap, while NQ only reach into the opening of it. I mean, just look at this. This is beautiful. Like how perfect it tapped on that level that is mentioned. Appreciate this. Okay, so on H4 we are in reversal quarter of the year, the month, the week. So reversal quarter of the year meaning Q4, and then the Q4 of the month, which is the last week of the month, and then Q4 of the week, which is Thursday going into Friday. So in this expectation, I'm anticipating for NQ to be the one that goes higher. So logically, it has less companies and they are also more volatile. They are the tech companies, right? So the people over there don't complain as much about the manipulation. So overall, I'm expecting for price to go lower. But if I were to see a divergence, it is likely to come from the NQ one because it's tech stocks, it's more volatile, and the people are anticipating, more like manipulation over there as well. Okay, but as we go down into H1, I actually saw a divergence between Tuesday and Thursday because Wednesday is a public holiday, so we can't really see it there. You can see that on ES, Tuesday's high was here, and then on Thursday it took out the high, right? And for NQ, we have Tuesday's high up here, while Thursday's high did not take it out. And on Dow Jones, we have Tuesday's high, and then Thursday taking it out. So this itself is divergence that I've been looking for. So we'll likely do a pullback down lower to balance out some of the orders. So now I'll look out for PDLs as discount area. So NQ is likely to push lower as it gave us this lower divergence. So that itself is a divergence within the intra-week time frame. So we have each day that's being taken out, the previous day's high, and then a reversal in the market. So there's also a precision swing at 5 a.m. at the closing of London Q zone, right? So what I'm saying is this 5 a.m. candle, right? So the first high was created up here, and then at 5 a.m. it created the reversal, which gave us the divergence. So what I'm just saying is that you can see signs in the market, whatever that it's trying to do. This is another state of divergence. Just look at this, like red candle, green candle, and then red candle, right? And then the reversal actually came on the next candle where price started to return higher, and return higher. So one more thing that I said about this is that it marks the end of the manipulation time of the day, which is your London Q zone. So from 2 a.m. to 5 a.m. is the manipulation time zone of the day, right? So these are the time when market actually push against where it wants to go. And then New York, it gave the real move of where it wants to reach into. So we can see on the entire Thursday, this was what it wanted to do, which is this move here to take out the previous day's high, this move here to return back into fair value gap, and this move here to take out previous day's high, giving us the divergence for price to go lower, right? So you have to see like larger time frame, price wants to go lower, and then smaller time frame, there's always this little like reversal move that you can capture on if you're doing more of the scalping methods, right? So now I'll be talking about the intraday move, which is the larger time frame, which is the play out of the divergence on top into lower prices. The intraday move will be to wait for Dow Jones to reach the previous day's low within New York AMQ zone, which is 9:30 a.m. to 11 a.m. With new week opening gap so close to the market, I would expect that level to be reached as well. Okay, so here we have the previous day's low, right? I marked out the previous day's low. This is the Friday play out, and then this was also where the previous return price came from. So whenever we see like a reversal, and then we know that market will collect more orders the moment it starts reversing. So now this previous day low is a good liquidity area for you to take some partials if you're shorting the market already. So these are the levels that I've marked out, but now what I have to do is wait for time. So I'm waiting for 9:30 a.m. to show me what price wants to do. So at the time of this chart, this was London timing, and it was 6 a.m. So here's 2 to 5, right? And then this candle is the 6 a.m. candle. So it's the lull period, and it's not any of the Q zone that is happening, and therefore I'm not looking for any trades. But I've already have all of my price level marked there. So when time comes, all I have to do is see how it reacts when it reaches there. Okay, so at 9:30 opening, all three have taken out Thursday's low, which is previous day's low, but only NQ has taken out the previous 2 days low, which is Tuesday's low. So I'm gonna show you, this is the previous day's low, previous day's low, previous day's low. As 9:30 open, you can see that ES has already went lower, NQ has already reached into even Tuesday's low, and then for Dow Jones, it has taken out Tuesday's low over here. So it's a green candle, which is a nice little pullback already. And then we have NQ being a red candle and a bearish red candle for ES as well. Okay, so price reached into the new week opening gap as well. So as market opens, we can already see that it's pushing heavily downwards. Okay, so I didn't take any trade there, but I'm just going to show you guys like my study materials, and you guys can just implement it onto your own trading strategy. So you can see that all these price levels were already there before price reached into it. So now, how do we refine it into a good trading entry? By implementing time. So everything that ICT does, when he talks about every single trade, is time. Time is the most important aspect when it comes to it. So we have price axis and then we have time axis. How can we just rely solely on one axis and not make full use of the other? So I'm going to show you some magic, and the moment when I studied this, I'm like, wow, amazing. So I'm hoping that you guys would also feel that way when you see what I'm about to show you. Other than that intra-week divergence between Tuesday and Thursday, there's also an intra-day divergence where you can see that ES, London's high, which is London Q zone high, was up here, and then the New York session failed to take out this Q zone high, when NQ actually managed to take out that high, and Dow Jones did not manage to take out that high. So this is a divergence itself again. And based on this, the better intraday trade would be ES because it's giving us the lower divergence. So on larger time frame, NQ would be the one because it's the lower one. And then on smaller time frame, ES would be the better one. So the safe entry is when price retests new week opening gap on 9:50 a.m. macro timing for ES, reaching into the next new week opening gap. So another reason why ES is better, because you see that this new week opening gap to the next one has not much PD arrays within it, right? So new week opening gap is like the weekly time frames PD array. So it's way stronger than the previous day's low, way stronger than the daily time frame one. And then when we look at NQ, you can see that from one new week opening gap, there are way more stops in between to reach the next new week opening gap, the ultimate, the best TP area. So over here, there are less resistance, and therefore you can use this new week opening gap of the break, retest, heading straight to the next new week opening gap. And now we're going to implement the time aspect of it. So here is ES on M15. I'll show you guys the trade setup. So here we have 9:45. This is the minute 15 time frame. So this entire candle represents 9:45 to 10 a.m. time frame. So you can see that among this entire push lower, we have a pause in the market right at the macro timing. And then price returned back into the new week opening gap before it gave us a shot down into the beginning of the new week opening gap, and then it hover around a bit here before pushing down all the way at 12 p.m., which is the closing of the entire New York AM session, right? So continue reading this. You would reach a 4.44R at the bottom of new week opening gap, which is reached right at 12 a.m. lunch. So this is also usually when I close out all my trades going into lunch, all right? So if you only reach to the top of the new week opening gap, it would be a 3.33R trade already. And if you are reaching it a bit lower, it would be 4.44. And also an additional tip that I can give you guys right now is that going into New York PM session, that is the reversal session, right? So this is why I close out all of my trades by 12 a.m. lunch, 12 p.m. Ugh. I'm in Asia, okay, so I need to get used to whoever that's watching this. I will always be referring to New York time frame. So 12 p.m. lunchtime is when I close out all of my trades, and you can see why, right? It would just return back higher, and that is the end of the move. Like this short little move over here is enough. So entry level at the new week opening gap, stop loss, I placed it above previous day's low, because this to me is a support turn resistance, and this is a good level for me to place my stop loss. And then TP, if you want to get out of the market a bit earlier, which is over here, it would be 3.33R. And then if you waited until the entire new week opening gap. This is a 4.44R. So what I'm showing you guys is just the entire framework and how to anticipate market moves when it comes to price and time. So when you just implement ICT, strategies like this, everything just makes sense. You're trading within a very limited, confined space where it's very controllable because you have the time aspect and the price aspect already set out for you. By 12, you are going to close out all the trades, be it whether it reach the end of the new week opening gap or the beginning of it. So worst case scenario, 3.33, right? And then the best case scenario is 4.44. And then if price keeps going lower, you're like, I'm fine. I've took my bag and I left. But most of the time you'll see stuff like this where price just reverse back into your entry and you're like, yes, I got the bag before it reversed back into my break even. All right, so let's take a little pause in the analysis. Here we have Hydra's challenge that is currently going on. I'm currently taking one of their funded challenge. So just a little breakdown of how it would look like with that trade at 1:4.44R. You can see that the maximum drawdown is 9%. And then the daily drawdown is 5%, industry standard. And then the profit target is 8%. So with the trade setup that I just showed you, which is a 1:4.44, if you were to risk 1%, you will not hit your daily drawdown and you will also not hit the maximum drawdown in a day, but your potential reward would be 4%. So just 2 of such trades would get you to pass the first phase already. And maybe just 1.5 of the second trade would help you pass your phase 2. So to me, right, Hydra has the option for you to get funding up to 1 million. So if you're really looking to continuously stack up your account, I would say go for Hydra because right now it's one of the most generous ones out there and they're honestly trying to look for good traders that they can invest in. So they want to stack their money on top of good traders instead of betting against you. So if you guys are interested, make sure to use my link down below. You are also supporting my channel when you use any of my links in the description. So thank you in advance. Alright, so that is it for the least likely tradable day of 2024. I hope you guys learned something from this. And if you did, please leave it down in the comment section below. Give this video a thumbs up as well as subscribe to my channel and I hope to see you guys in the next one. Bye!